What's good, YouTube? Welcome back to my video. Today I'm going to be talking to you guys about SNDL. I'm just going to be giving you guys an update. So there is some big movements that will be happening with SNDL. It's going to be happening in the short-term period, and I'm going to give you guys some future outlook for the company as well. I'm going to be going over what can cause SNDL to fall either tonight or tomorrow, or what could cause SNDL to go even further. And I'm going to be showing you guys the resistant levels, the support levels, and the Fibonacci levels that I have called out. And the chart literally did every single thing it called out when I called it out at 62 cents, and I even called it out again at $1.04 or $1.06. I told people to buy back on those dips. Now I went ahead and tweeted about it. I've made videos about it, and as well I'm going to go over everything with you guys. I'm also going to be doing a small account challenge. So I'm going to be taking a sum of money and trying to flip that into millions of dollars within 10 years. So I'm going to be showing you guys what I want to be earning, and you guys could follow along for the ride. I'm going to be showing you guys the returns I have so far with that small account challenge, which I started only this month. And I'm going to be showing you guys a good Excel sheet that you guys should all be using in order to write down what you guys are purchasing and kind of just have like a journal entry, which will definitely help you out. Before we get started, if you could please leave a like and subscribe. So in regards to SNDL, I've called the stock out and I've mentioned so many support levels and resistance. So if this looks a little complicated to you, I'll just make it easy for you guys. All these orange lines are support or resistance that the stock needs to break. These lines right here are where the stock will most likely end up, or most likely will touch during the projection of the stock. So right here where I called it 62 cents, I said there was going to be a resistance at right here. So right here where I called it, it was about 62 cents. I did say there was going to be a resistance right here at about 75 cents, and it struggled to break it 3-4 times. It went down, almost back down to the support, and went back up. It broke this support, it broke the resistance, went over here, struggled to fully break this, went back, and as you can see, it was trading in between these two yellow lines. And then again right here, struggled to break this, went back down, and this is where the good stuff happens. And I've called it out multiple times on Twitter. So it broke here, it ended up going to that 138 Fibonacci level, struggled to break that resistance, finally broke through, and as you can see, the top end almost hit that 190 level. The next candle, it literally opened up at that 190 level, struggled to break that 235, finally broke that 235, and bounced back right down to that 277 level. It's a little few cents off, but it's pretty accurate. And then right here again on today, it literally went ahead and struggled to break that 364, but it literally went a few cents over that 364. So as you can see, this chart's very accurate, and I did make a YouTube video ahead of time. Right now, after hours, we're looking at 352. So essentially what we need to do is see the stock keep going up after hours. If it can maintain and stay above that 364, that's going to be a very good sign. If we struggle to pass the 364 midway through the day, we could see the stock go down to that 277 level. If we break that 364 level, we could literally see 417, give or take. So you could see about 396 to 417. The next level would be about 433. Then we have all the way up to 519, and then after 519, 706. Honestly, I don't think it's gonna go up here in this short period of time, but you never know. But I'll definitely start looking into it at 417, 420. Once it hits that level, I can make another video with another update. But for now, just pay attention to these 277, 364. We got to go above that 364 and stay above it. And just not really fall down. If we do fall down, we could go see that 277. From there, it'll go down to 235. All right, so literally everything I've mentioned here literally happened a couple cents off or right on the dot. Now, what I wanted to mention is I've tweeted this out. Naked, I literally said, boom, we're breaking out. If we break out, we're going to go ahead and hit that 162 level. And after that 162 level, we could go ahead and see that $2 level. And what happened with Naked? It broke out 152. We passed that 160, that 160 level. We're at 170 right now. So as you can see, we literally passed this 162. We're at the 170 now after hours. We just got to maintain it. And we can see that $2 level and even $2.36 level. Just don't mind me. I just took this picture at work. So we could literally go ahead and see that 236 level or even that $2 level. If you're already in it, then you could go ahead and keep riding the wave. Just make sure you increase your stop losses. If you're not in it, I wouldn't really jump in unless you just use that 162 level a few cents under to keep it as a stop loss if you enter at these levels right now. But it is much riskier to enter in now than it was if you were to enter it when I called it on Twitter 14 hours ago, as I'm recording at about 2 a.m. in the morning. So in regards to SNDL, how do I see this going up in the near future? There is that 10-day compliance, so I'm going to go over some due diligence just quickly. So on Twitter, I did mention, on Yahoo Finance and on Twitter, I did mention that this isn't a pump and dump. This is actually a good company. SNDL have no debt. There's a short selling restriction on any day that drops 10% or more. And I said if a stock dropped 10% or more, buy the dips. And I said that way before the stock jumped up. So you might want to watch out for the 10% dips if it does happen now. But back in the lower levels, I did mention if there's a 10% dip, it is a really good time to buy. The CEO is looking to acquire another MJ company. So if it does acquire another MJ company, the stock will go up. What's causing all these stocks to go up, the MJ stocks, is because of the legalization and decriminalization of MJ. And I've mentioned this way before. I mentioned that the stock was very easy to use and manage the risk, and it's really easy to use the charts using support levels, resistant levels, and Fibonacci levels. And literally, like I showed you guys in the chart, everything happened to the T. There was a payout by Zinibus, so they received 50 million. They got another 400 million for 75 cents when they did an offering, and they did the last offering. And the most important part is the 3 out of 10 days that were above $1. They need to meet 10 days in a row to not get delisted off of NASDAQ, and they could stay on the NASDAQ without doing a reverse split. So officially, as of Thursday, if we close over $1, it will meet the 10-day requirement, and we can definitely see the stock go even higher. And we could definitely see the stock go even higher at the levels 417 and even higher than that. But there's only one issue that I could see that will possibly bring the stock down. So ACB is announcing earnings, and they're projected to lose 19 cents per share. If they can meet or beat expectations for earnings, you'll see MG stocks run like crazy. Plus, with the 10-day compliance, SNDL is gonna go nuts. However, last time they did a reporting, they missed earnings by over 166%. And this is Aurora. So what happens is when a company in an MJ sector announces bad earnings, it typically affects the other companies as well. ACB will see the biggest hit, and then the other companies will see big hits too, but it won't be as big. So definitely look into earnings and see and watch ACB after hours. If you see ACB is doing good or doing decent, then I'd probably hold on to SNDL a bit as long as you maintain those levels that I mentioned earlier. If not, then if they do bad and you start seeing ACB go down in price, then I would probably go ahead and take some profits, secure some profits, or just higher your stop loss. Alright, so in regards to my small challenge account, I basically got the idea and the motivation from Trading Rush. As you can see right here, the screenshot's been taken from Trading Rush's YouTube channel, what he was posting was if you start off with $1,000 and you could get a 10% return each month, and every month you're getting a 10% return. After 1 year, you're gonna finish with 3,400, then 11,000, then 3 years, 39,000, and as you can see, it just gets bigger and bigger and bigger. And in 10 years, you're looking at $206 million. So literally, if you wanted to, you could do this for 7 years. After 7 years, you could just retire, never have to work again, and just have your money sitting in like a dividend play and just receiving 6 figures for the rest of your life. So this challenge, what I'm going to do is I'm going to be starting with $4,000. I'm going to have 2 accounts, one with 2,200, another one with 2,200. And I'm going to be going ahead and just trading from there. Now, in regards to my portfolio, currently right now in the month of February, I am up 30.27% as of February 9th. So currently right now after the SNDL trade, I'm up about 65 to 70% just for the month of February. So like I said, all we need is 10% a month. And we can go ahead and achieve this goal. Right now I'm surpassing this goal by a lot. Obviously you're gonna have some months where you do bad and some months where you do excellent. Like so far this month I'm doing excellent. Hopefully it continues for the rest of the month. So what I'm going to do is, this is the Excel sheet that I'm going to have. I could send this to you guys if you guys are interested. Just let me know. I could go ahead and email them to you. Essentially what you do is you put how much you're starting off with right here, and you enter the symbols, you enter the entry dates, the price, and then the entry size, and then your exit. So if you sold the first half and then the second half, and then it automatically calculates your profit and loss, and then it tells you how many days you're in automatically and how many days you're in the trade. And then here you put notes if you're doing what you did good or what you did bad, so that in the future you don't make the same mistake. So example right here, I just put like I started with $2,294, and I've been putting down my trades and what went good and what went bad. So as of right now, I got one small loss, and basically the company did an offering. According to the charts, it looked good, but the company did an offering, so there was a news, and it brought down the stock. My other positions I've sold out. This is for my chart account. Then I have another account for day trading. So essentially I have rules that I set up. It's going to be 2 accounts that I'm going to be opening up. One account is based only on charts and actually reading charts and doing proper risk reward management. Then the other account will be mostly buying based off of Twitter, any alerts that I get, any hype stock, or buying based on like hot sectors. So if 1 week wheat plays are good, I'm gonna hop into the wheat play. Then if I see EVs are good, I'm gonna, keep switching between sectors and keep trying to find the stocks that are hot and the stocks that are in high volume. So my rules that I have for this account, or for this small challenge, is no FOMO. So no just rushing in and putting money in if the stock's gone way up and the charts don't make sense. Maximum I could put is 20% in a single stock. Typically I'd want to have 5 to 20% in cash to be able to buy on dips at a price target. So when I do enter a stock, I'm going to have certain price targets. When it hits that price target, I have to secure some profit, so at least I don't get greedy. And I have to have stop losses. You have to have stop losses in order to make sure you don't lose on you don't lose your profits, and 2, you don't lose much on trades. So you want to win big and lose small. So even if you're losing half the time, your wins are going to make up for the losses. So even if you lose, let's say you take 100 trades and you lose 70% of the time, if the amount you win is so much bigger than the amount you lose, you're always going to be a profitable trader. So that's essentially what I want to do. Do not get greedy, and then write down everything that you do good or bad. So as an example, ANCN, I got into the stock, I kind of FOMO'd it. I got into the stock, it went up, but I was busy at work. I forgot to set my PT and my stop losses, and because I forgot to set that up, when it came back, I took a loss and I just went ahead and sold it. Looking at the charts, it didn't look too good to me at that point in time for the day trade. So I went ahead and sold it. So I made a mistake of not putting a stop loss and not putting a take profit automatically for me if I knew that I was going to be busy at work. So that's just an example. I will be notifying you guys on Twitter basically if I do take any positions. I will probably be posting more often on there. So my Twitter is Finance. Now that's pretty much it. If you guys do have any questions, you guys could always hit me up on Finance 24/7 on Twitter. You could DM me if you want a copy of the Excel sheet. Also hit me up on Twitter, and I could go ahead and email that to you guys. Peace.